Hi, I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago. Well, CME asset classes, down small, mixed, however you want to call it, it's really a broken record market right now. It seems like there isn't a whole lot of volatility anywhere, but let's talk about equities first. It seems like the equity market has been dancing around unchanged all day, and the same with the VIX or the implied volatility in the Dow, maybe not as much the NASDAQ, but right now all the volatility is within a quarter point of being unchanged. The biggest mover today would be the NASDAQ, up about a point, 1 month at the money implied volatility. Moving on to FX, the U.S. dollar is higher against all crosses. That's something we haven't seen in a long time, that except for the Japanese yen. But with that, we're seeing a pretty big spike in volatility. The FX ETF volatility is up 5%. That equates to about a point and a quarter in aggregate for your 1 month at the money implied volatility. Japanese yen, stunningly, is basically unchanged on the day. Moving on to gold, gold volatility down small. It seems like traders are starting to get comfortable as gold right now trading about $16.80 an ounce, has been staying above that key support level of $16.60, giving pause to the market. People are starting to get a little bit more comfortable with the upward trajectory in gold, hoping to see that 1700 level, but gold vol is off just slightly today. Oil volatility, that's another story, unchanged on the day. Oil is off a little bit after this enormous run-up we've seen since the beginning of the year. Oil vol started the day lower, has climbed back right now unchanged on the day, but it does need to be said that 3 to 6 month term structure is steeper on the day, so it seems like people are a little more concerned with the next 3 to 6 months and maybe not the next month. Now, ags are an interesting story. We've seen volatility climb every day in corn, wheat, soybeans for the past 3 days. Right now, taking a little bit of a pause. Most 1 month at the money implied volatility off just a little bit in most ag products. A lot of that was just people just coming to terms with the USDA reports that came out on Friday. Markets repositioning, looking for the next resistance levels. Right now, ag vol seems to be off just slightly on the day. I'm Larry Shover, CIO of SFG Alternatives, reporting to you from the CME Group in Chicago.